Good morning, everybody. It is about, what time is it? It's 10:01. Hey, we're on time. This is awesome. Good morning. I'm Ronnie Sterin. I have Carlos Benedeti with me, and he's a financial advisor, money manager, all that great stuff. We're going to go over all those details in a few. It's Monday. It's the 27th of April. We're doing, wouldn't you say so, Carlos?
Yes, absolutely.
We're just getting used to everything one day at a time, and that's the best we can do. I Today what we're going to be talking about is something that I'm not very well. I'm familiar because obviously I have my own financial advisor. Have you met Carlos? But I am a little green about details about what money managers do, what financial advisors do, how the market's doing. I can tell you as far as real estate, the market is actually doing good. It's obviously has its slowdown, but I can tell you that from last night to today, there are new listings. We get a hot sheet and a market watch every morning. There's 30 new listings in our area of Broward and in the Broward County area, sorry. There's some price decreases. There's actually price increases. There is over 39 properties that went under contract in the last 24 hours. So the market is still going. Everybody's got their thing, but it is definitely still going. If you have questions, call me later, 305-942-7446, and we'll discuss how everything is going and what your real estate needs are. Now, about everything else, Carlos, explain to us exactly, introduce yourself, explain to us exactly what does a money manager slash financial advisor do?
No problem. Well, thank you guys for having me. I really appreciate this opportunity to speak to you today. Very, very grateful for it. So, my name is Carlos Benedetti. I am a registered investment advisor with American Portfolios. So, first, my disclosure. Um, our company is a member of FINRA SIPC. Investment advisory services are offered through American Portfolios, which is an SEC registered investment advisor. And my company is called Passport Wealth, and it is not affiliated with APFS or APA. So, a financial advisor is really somebody that is helping clients achieve their goals financially. And, we're talking about how much do you need to save for retirement? Where do you save? How do you save? How much do you defer into a retirement plan? How much do you not defer into a retirement plan? So there's a lot that a financial advisor does. Besides being a financial advisor, I'm also a money manager. So years ago, I did business the way most advisors do, where they use mutual funds or third party money managers. And a third party money manager is really nothing more than a company that manages money on behalf of clients. And that money manager is found through a financial advisor. So financial advisors connect money managers and clients, and then the financial advisor monitors what the money manager is doing. So back in 2016, I decided to become my own money manager for my clients. So not only do I advise the clients on what they should do, where they should do it, but I also manage the funds proactively. And that's what I do. So I go a
That's
step
an excellent.
beyond. Yeah, so I go a step beyond many money manager or many financial advisors.
All right, perfect. So as far as, you know, everything that's going on around us, obviously there's a lot of stress that's involved in the current virus, COVID-19, Corona, Rona, whatever you want to call it. Everybody's a little stressed. Everybody has, if you work for a corporation or you work for somebody, you have your 401k that was set up and you have everything that, correct me if I'm wrong. You have your IRAs, you have all different accounts that are out there. There's people that I've heard that are looking into liquefying everything to just get rid of, any accounts and just have cash.
Right.
Where are the markets right now? if you could address kind of like the fears and the hopes and then
So
where we are.
no, that's a great thought because I think the markets are controlled by two emotions, fear
Yeah.
and greed. Those are
Right.
really the two emotions that control the markets. So you have fear of losing a lot of money, but then you have greed that you don't want to miss a gain, right? So a great analogy is kind of like all of us are going to Publix, and none of us really want to go to Publix because you're scared that what if that's the visit that you get the virus. So then you say, well, let's find Instacart, and then you hate using Instacart because they get you the wrong stuff all the time. So you have this like desire to go to the store, to things to be back to normal, but you know they're not back to normal. So the financial markets are very similar. So you're seeing a lot of carnage out there, financial carnage, companies going bankrupt. You're seeing unemployment. You know, there's now 26 million people that have filed for unemployment. Yet you see the financial markets going higher. And then you're like, how does that make any sense? It makes no sense at all.
Right.
So, in one hand, you could say, wow, you know what? I'm just going to sell and go to cash and sell every stock, every bond, gold, sell everything, oil, and we're just going to go to cash and sit it out. The problem with that is, what if the markets bounce another 20%? Then you're like, oh my goodness, we just missed that entire ride. And you just sat on the sidelines the whole time. So the fear of missing that is really big. On the other side, if you say, no, we're just going to hold our course, and then you end up with a bear market like in the year 2008 or in the year 2000, which was 3 years in a row, then you're like, man, I wish I sat out. So you have this massive fear of both sides. Both sides are very fearful right now, and it's a very complex situation, because economically things are horrible, as bad as they've been in the Great Depression, but the markets are really a forward looking mechanism. So if you try to figure out why it all makes sense, you're like, well, the market is not focusing on how bad things are. The market is focusing on how much better things could be than where we are right now. That's what the market is looking at. It's looking at forward 2 months, 3 months, 4 months, but it's not focusing on the dire situation right now economically.
What would you say is what have you been seeing as far as, obviously you cannot disclose your clients' transactions, but as far as everybody's feelings, like what are they telling you? Okay, turn around and do A, B, C, D. Can we, invest more? You're not giving advice, but are you seeing some kind of trends? I guess I'm trying to say.
So, I'm a very hands-on advisor and I communicate with my clients really well, which is good and bad, right? So it's good because I keep them in the loop, but it's bad because then sometimes I feel I'm too accessible to them. And I have conversations with clients every week. Some of them are like, yeah, we should be in the market. Others are like, no, we should not. So it's all over the place. There is like no consistency right now. Most clients, I think, are really more scared of losing than they are of missing the gains. Um, it's interesting what the views are of people. Most people don't feel that we're going to be at a new high anytime soon. I think there's more fear that we're going lower versus going higher. But if you look at the market from February 19th, it fell 30. When I say the market, I mean the S&P 500, which is the
Right.
index that is most followed by money managers. It fell 33% in 33 days. It was like the biggest slide we've had pretty much ever. And since then, we've already bounced like 60%. So we've covered like 60% of that bounce. We're still 17 or so percent below where we were in February. So we're kind of right in the middle of where we came from, the highs to the lows. And, it's a very complex situation. You hear CNBC, there's a very smart person who says we're going to new highs. 2 minutes later, another very smart person comes out and says, we're going to new lows.
Yeah,
So
it seems that there's extremes in
yes,
like all the financial consultants that there are on medias,
right.
that there is extreme. And I think that's what causes the fear and
I
causes the
agree.
doubtfulness. A person they said, oh, buy, it's going to be A, it's going to be C, whatever they're saying. And the person B saying, oh, no, we're going to head into a recession and get ready and everything else. They also said that about real estate. And right now, obviously, I'm not seeing it. I am showing homes. I'm working with different clients. I am, everything is still moving, but we're working day to day. But you know what's going to happen immediately.
Well, the financial markets are similar in the sense that they're already saying we're in a recession, but the financial markets don't, sometimes they decouple from the economic markets. So the economy may still be going down, but the financial markets, because they're forward-looking mechanism, they a lot of times move ahead of how things are in the economy. So not that the financial markets are more optimistic, but they're basically saying, hey, we already hit bottom. Now we're going higher. Now, unfortunately, what we're in right now is called a bear market, which means that the market fell more than 20% from its highs. And the bounces that we're having right now are typical of bear markets. The biggest bounces in the market typically occur before another big drop. And that's a scary statistic, because if you're thinking, all right, we just had this 50% gain or whatever, 26% gain from the bottom, normally it then reverses to go back lower to where we were before. And I think that's a fear that a lot of financial advisors and money managers have, that everybody's kind of like staring at this precipice and nobody wants to fall off the cliff. But at the same time, you don't want to miss the bus ride going to greener areas. And that's kind of a big fear. So it's hard to say where we're going to go. And the only fact is that it's a very mixed environment. So, as far as predicting what's going to happen, I think that's the craziest thing for somebody to do, is to guess where we're going to be in 3 months or 6 months. So it's hard to say.
Melissa, sorry to cut you off. Melissa's asking something, and you guys feel free to either put your questions on the watch party or on the live video, or message me, which is this case. Melissa's asking, where could the market go from here, as far
Okay.
as positive, negatives that could influence it?
So I'll tell you some of the bad news that's pushing the market sentiment down, and I'll tell you some of the good news that is kind of pushing the market higher. Let's start with the good. On the good news, really the only thing that I believe is very good is the amount of government stimulus that they have done. So far, between the government and the Federal Reserve, they have injected about $6 trillion of stimulus into the economy. So what they're doing is they're providing a bridge for companies and people to not go totally bankrupt, pretty much. So not only in the US, but globally, a lot of other central banks and governments have done the same thing. So it's kind of like that. If a patient is in the hospital, it's the IV. So the IV is keeping the person alive until they can become stronger and carry on their own. And I think that's kind of the biggest positive news that's going on right now, is the government does not want companies and families and people and small businesses to close their doors completely. So that's the major ray of hope. On the bad news is you have unemployment, right? So that's 26 million people have filed for unemployment claims. That's the largest number ever. Last week we had 4.4 million new unemployed people, compared to the prior week of 5.5. So you could say 4.4 is a horrible number. On the positive side, it's better than the prior week of 5.5. So that's kind of what the market is focusing on, is not that the absolute number of 4, but it's the 1 million less. So that is keeping a little bit of ray of hope that maybe the worst is over. And that's why the markets are kind of forward looking versus the economy is always kind of 3 to 6 months in arrears. What else can I tell you?
People, I mean, sorry to cut you off. So David just made a comment, and he's a comment slash question is that people tend to link recession to extreme crisis like 2000, the earlier years of this century. But what is the real meaning of recession?
So recession, the technical meaning of a recession is when the U.S. has 2 consecutive quarters of negative GDP growth, which is the gross domestic product. On Wednesday of this week, we're going to have the first quarter GDP come out. It's estimated that it's going to be a 10% drop from the prior quarter. So that would be the biggest drop. If it's 10, it would be the biggest drop ever in one quarter. Now, if the second quarter comes out negative, that's the definition of a recession. But if you notice, whenever the government says we're in a recession, it's always 3 to 6 months in arrears. So the stock market may be far ahead of that and even be bouncing by the time the government says we're officially in a recession. So I think that's what's creating the ray of hope. I'm not telling you that the worst is over in the stock market, because there is a possibility that the market could go back down anywhere to where we were, which was like around 2285, I believe, was where we bottomed. The top of the market was 3370 or something, 3370. So we basically traveled a little over 1,000 points from the highs to the lows. So there is that potential we could see things get worse. Maybe if the virus comes back, I think that would be a very bad sign. But if things economically continue to get less bad, then maybe you'll have more positives than negatives. Now, the way I manage money is I'm very proactive, like I said. So I don't buy and hold. Now, there's a major battle between what's the right approach to managing money. One is you buy and you hold, and that is a long-term strategy that basically you're predicting that the market is going to always rise long-term, which it always has. However, we have periods like in the year 2000, 2001, and 2002 where the market lost 3 years in a row. Then you have periods like 2008 where the drop was like 55% in a matter of a year. So you could go right back to the new highs, but it's going to be very painful. That's the typical buy and hold approach. The other approach is more tactical, where you say, hey, listen, I think things look bad. We're going to sell and go to cash, or we're going to move monies from stocks to bonds temporarily, and then we're going to go back in. And that's what I do. So I much rather.
What would you say as to right now, for our current situation? I haven't even looked at the market this morning. You know, what I look at is mortgage interest rates. That is my wake up coffee. Right. What can a normal Cooper City person, family do to define their strategy for to define a strategy for savings, investments, you know, be it Cooper City, be it Broward, be it whatever it is, whoever is, because I see people are watching us from overseas as well. I mean, what would be a safe thing to do right now compared to something that is not, something that's a little bit more risky, I guess. I'm a little lost for words this morning, which is amazing.
So I think that managing money is really, really, really difficult. It's probably the hardest thing ever, because if you think about, let's say an engineer says, all right, we need to build this bridge. It's got to carry this much weight. You pretty much know the formula to make that happen. And as long as you follow the formula, your bridge is going to stand what you want it to withstand. A portfolio is very different because, as you know, like this virus situation came out of left field, out of nowhere. Nobody was planning for it. So if you build a bridge that is supposed to withstand certain number of cars, but all of a sudden an airplane goes on it, it's going to fall. But you weren't planning on an airplane going on a bridge. So the stock market is constantly full of things that nobody saw coming. So the point that I'm trying to make is that it's not very easy to predict what's going to happen in the markets, and to design a portfolio to handle all things that could be thrown at it is not that simple. So for most people that are managing their own money, trying to just pre-plan is very difficult. So I think everybody should have a financial advisor that is discussing the strategy with them and say, this is what we're going to do. If this happens, we're going to do this. And that's what I do all day, is spend a lot of time trying to figure out what's the best approach to handle things that maybe are foreseen, and things that are not foreseen, and how we're going to handle that kind of situation.
A lot of the people have a 401k. Um, can they do something better, anything better than just holding their money in the 401k?
They really need to have the funds in the 401k. Now, because of the CARES Act right now, that is the new law that got passed to help people deal with the virus situation. It's called the CARES Act. The CARES Act does have a provision that says you could take your money out. Some of them could be a loan. Some could just be a flat out distribution. If, let's say, you don't like the way the 401k allows you to move things around, a lot of 401ks have restrictions on what you can do, how much you can move. And if you move now, you can't move later. So there's a lot of stipulations that are placed on that. If you were to call your 401k and ask them if you're able to take the funds out, you can maybe then use a money manager, put those funds out of the or take the funds out of the 401k, stick it into an IRA with a money manager that's going to try to navigate the markets better than you, then that might be a possibility. So I'm in the process of doing that now for a client, to call their 401k and find out if we can take the funds out and stick them into an IRA where I can manage the funds more, what's the word, more freely and more nimble. And I think that the key is to be nimble, to be able to move things one way or the other very quickly, very efficiently, with no fees. Therefore, you may be able to protect on the downside better and take advantage of the upside better. And that's kind of my goal.
We have a few teachers watching us, and teacher salaries, we all wish that they were higher. We all wish our state would do something a little bit better for them, or actually our county, even if we go down to the little nitty gritty. What do you, how do you, yeah, they have a credit union, obviously, and they have, a certain way of doing things for them. Do you know if maybe by chance, do you know if they are entitled to withdraw their funds and put it into an IRA or put it into something that will give them more money?
So the client that I talked to just about recently, or just a few seconds ago, is a teacher, and she's a Broward County school teacher, and she has the Florida retirement system. So I'm in the process of calling them to see if she could take the funds out, if that's possible. Then if she can take the funds out, we can roll it into an IRA with an account that's more nimble. The ultimate question really is this: is a year, 2, 3 years later, is the market higher or lower? You would say that the odds are that the market will be higher, right? Those are the odds, but it's a little cloudy these days, right? So you could say, well, it probably will be higher, but there's a greater chance now than there was last year that the market could be lower, right? So ultimately, trying to predict where things are going to be in the future, I think is kind of a silly effort, because really it's just a guess. I think better is to have a strategy to handle either or, is to really say, if things are this way, we're going to do this. If things are this way, we're going to do this. I think that's the more important um, exercise than trying to predict where things are going to go. Right? Does that make sense?
I always tell, I have people asking me about real estate related stuff. And I said, I'm sorry, my crystal ball is not working right now.
Right.
When it does, I will let you know. But
Yeah.
yeah,
Yeah.
obviously there's a lot of uncertainty,
Yes.
and obviously tax season was extended,
Yes.
and our taxes are due now on July 15th, I believe.
July 15th. Yep. As
July
well as
15th.
IRA contributions. So if you need to contribute to your IRA for 2019, you can also do it by July 15th. So
So
it
that
got
was my
extended.
next question.
Yes.
Is there something that, let's say somebody does have that extra money, that they wanted to put toward their retirement, they could disperse it into an IRA,
Yeah.
their IRA account.
Yeah, but it depends though. If let's say they work for the school board and they have access to a retirement plan, then
Uh,
they probably want to add that to their retirement plan because that's going to be deductible
gotcha.
pre-tax. But if you make a contribution to an IRA based on the family's income, that may not be tax deductible.
Going back, I mean, our friends from the school, my teacher clients and friends, and a few others that work for the school board are still online. Um, if they are, that's a cause that's very near and dear to my heart, especially now that people are realizing how hard it is to teach and how hard it is. I mean, we knew it before,
Right.
just like we know a lot of other positions are hard, but I mean, I feel for these teachers. I really do. My friend Carrie was out there with the red signs and the red shirts and everything, trying to get a higher pay. Wish they could have gotten it. But going back to this, the be it for a teacher, but be it for anything else. Sorry, I lost my train of thought for a second. If does money management, be it for anybody, does money management provide a tool for better approach to taxes? Because all of us hope to get money back, obviously. Some of us get it, some of us don't. What does it provide a tool?
So part of financial advice is really looking at where to save as a way to save on taxes. So retirement plans is obviously important. Sometimes somebody may get an employer match from a corporation. So let's say your employer tells you, okay, if you put in 4%, we'll give you 3%. So maybe for that person, depending on their income, they could do a Roth IRA with the additional amount. So there's a lot of different things that could be done to take advantage of tax rules, tax plans, and based on the individual's circumstances, maybe they don't even have a retirement plan, or maybe they're self-employed like a realtor, and they could do a SEP IRA, which is a self-employed pension, or a simple IRA. So absolutely, a financial advisor can really look at every aspect of that person's household income and situation to figure out what's the best place to save and where is the best place to save. So that's a really, really important role of a financial advisor. The other important role of a financial advisor is we can do long-term predictions. So for example, we would ask the client, how much do you have now? How much do you save? And when do you want to retire? And with how much income? We can then run some calculations to say, hey, you're on track, or hey, you're short by $300,000, roughly. So if you save X amount per month for the next whatever, then that's going to help you get closer to that goal. And in life and in financial markets, certainty is, like you said, there is no crystal ball. All we can do is kind of get as close as possible to that goal, whether it's trying to figure out if markets are going higher or lower, or if you're going to get close to your retirement goals or not. The important thing is to save as much as you can in the right place and protect the money as best as possible and grow the money as fast as possible with the least amount of fees so you can get close to your goal as possible. And that's the
That's
idea.
sorry to cut you off. Mario is asking, What do you think about buying and tracking individual stock? Do you identify any special sector that will generate revenue in this interesting scenario that we're living in?
Yeah, Mario, I love the question. It's great. I actually talk to my clients about this all the time. I get clients calling me all the time. Should we buy this? Should we buy? I've had more clients asking me to buy Carnival stock this year than ever. I've never had that
Really?
happen. Yes, it's
Really?
crazy. So here's my theory on it. So if you go, my goal is to have, well, I don't know if anybody saw the movie called Moneyball. And Moneyball was a baseball movie about the Oakland A's. And this
You
it's a true
lost me there.
so it's a true story, and I'm not a baseball fan, but it's a true story. So the manager or the founder of the team said, "Hey, we're going to do things a little bit differently. We're not going to focus on home runs. We're going to focus on singles and doubles. That means hits to first base and second base, maybe a few third base, but no outs, right? So we want to focus on very few outs, just a bunch of singles and doubles." So, whereas most teams focused on the home run, which you can say that would be a stock, right? So, if you're trying to buy an individual stock, what you're trying to do is more hit a home run than you are trying to hit a single or a double. But if you broaden your scope and buy the stock market instead of an individual company, then your odds of success are higher, right? Because now you're not betting on one individual stock, which means that stock has to do really well. And the odds of that one stock striking out or going bankrupt are a lot higher than the entire market going bankrupt, right? Does that make sense?
Right. No, no,
So what you're doing is you're spreading your odds. And by spreading your odds, you don't need to make as much on one individual stock versus because you're going to have less outs. So you just really want more consistent returns versus big hits. So for that reason, in my portfolio, I don't focus on individual stocks. I really focus more on the higher probability trades, which is the stock market as a whole.
all right.
Does that make
Does giving my money to a manager put it at risk of losing it a la Maddox? So this is a question that comes from an anonymous. He said not to not to say his name, but that's an interesting question. I think people do have, a bad memory of what happened.
Oh, no question. I think that's it. So he's probably referring to like Bernie Madoff.
Yeah.
Yeah. So Bernie Madoff, what happened with Bernie Madoff is that unfortunately he was a bad person to begin with. Second thing that he did is structurally he created a company where the investors would put the money in his company. They were not putting the money in a custodian, for example, Fidelity or Charles Schwab or a good reputable um, custodian of your assets. So Bernie Madoff, as soon as he got the funds and the client said, here's a check payable to Bernie Madoff and Company or whatever his company name was, it was his money. He could buy a
Right.
boat, he could buy jewelry, he could buy whatever.
So they just gave him their money. That's what you're saying.
It's crazy, yeah. But unfortunately, that's what they did. And they didn't know any better, which is the sad part of it. And Bernie Madoff took advantage of it. So if you ever give money to a money manager, you never, ever write the name or the check payable to the money manager. It is always to the custodian, Fidelity, Charles Schwab, TD Ameritrade, whatever you're doing, the money never goes payable to the advisor. That is the worst thing that you could do. The money goes payable to the custodian. The advisor only has the right to buy and sell inside of the account and to collect fees, but the money is controlled and protected by the custodian. Does that make sense? So,
Absolutely.
so really the only thing the advisor could do is, let's say it doesn't work out. The advisor buys XYZ stock or fund, and the fund goes down. Now, normally a fund is not going to zero. So the chances of losing the money completely is very, very small compared to giving it to somebody like Bernie Madoff, where they could buy a boat with your money and provide you a fake statement. That's the
Or
biggest,
really nice apartment in New York, but
and
or
not
Connecticut,
and not
or
in your name, in his name or her name.
right.
There's girls that do bad stuff too.
Hey, we're not bad. Um, so um, he was writing Madoff. You're right, not Maddox. But yes,
Yeah, but that's a great question. I mean, and that's a concern for a lot of people. But the best way to avoid that is to have a custodian. You need a custodian.
what about what are different ways of that a person can set up a portfolio to either take advantage or protect their money during this difficult time?
So the normal way of people managing money is what's called passive investments, meaning so most advisors and individuals set up what's called passive portfolios. You buy and you hold. The problem with that strategy is you only win if the things you buy go higher. That's the only way you win. Because if all those things that you buy go lower, you're going to lose until they start rising. That's what's called passive investments. You're buying and you're holding, and now you're just hoping that it goes higher. What I do, and I do both, but the majority of my investments in portfolios are what's called tactical. So, tactical, you're looking at, is the trend higher or is the trend lower? And if the trend is lower, we're going to move those funds either to bonds or cash or gold or whatever, something that goes higher. So I don't know if anybody watches Cramer on CNBC, Jim Cramer, but he says there's a bull market always somewhere. So something is going down, something is going higher. Just like real estate, the price of any home is what somebody's willing to pay, right?
Mm-hmm.
The stocks are no different. So if everybody wants XYZ stock, it's going to go higher because everyone wants to buy it. But if nobody wants to buy it, it's going lower until somebody says, all right, fine, I'll buy it and I'll buy it for that much. So that's really the difference is you're trying to buy and hold in a passive portfolio, or you're going to be more tactical and protect on the downside in a tactical portfolio.
What about me? People like me, self-employed, 1099 employees, which for those of you who don't know, those are contractors. People like that. What is the biggest suggestion you can give them now? Some are not eligible for payroll, obviously for payroll protection. Some are not eligible for small business loan. I mean, there's a lot of different things that people do and do not cannot apply for.
So you're asking about self-employed people?
Yes.
Yeah. So, ultimately, I think everybody needs to have, whether you're a company or an individual or a family or a self-employed person, everybody needs to have a rainy day fund, right? So I think what happens is you either, people are, I guess you can put them in three different categories: an optimist, a pessimist, or a realist, right? So the optimist thinks nothing bad is ever going to happen. The pessimist thinks that nothing good is ever going to happen. And the realist really says good things are going to happen and bad things are going to happen. So, in my opinion, and this is kind of how I live my life, my business life, and my family life, and my investment life, is that I realize that good times will change to bad times and bad times will change to good times. So, I think the important thing to learn from everything that we're going through right now is that you need to prepare for some adversity in life. And the same with your portfolios and your finances. So that means you need to have funds saved. You need to have strategies. If this happens, this plan B. So I think this is the biggest lesson that this whole situation is teaching all of us. And we need to be a little more realistic versus so optimistic or so pessimistic. So for a self-employed person, that means, going forward, you have to accumulate some funds for a rainy day. You also need to save for retirement. It's sad to see how many people spend all kinds of money on fancy cars, fancy cell phones, fancy everything, but they have zero money saved. And then they say, Carlos, I'm going to retire in 10 years. And I look at their accounts and I'm like, how do you plan on retiring in 10 years if you have no funds saved to retire in 10 years?
Sure.
So the biggest asset people have is time, and it's free, right? But you can't get it back. Once you waste time and waste 10 years of saving power, you can't get that time back. Now it's going to cost you more to save as much because you wasted 10 years of time. So the biggest lesson is don't procrastinate, set up a savings plan, talk to an advisor. Do you do it as an individual account, a SEP IRA, simple IRA, Roth IRA? Figure out how to do it and start saving every month for that. And then find an advisor that's going to help you meet your goals, whether it's a tactical portfolio or a passive portfolio. And I think the key of what I try to achieve for my clients is that I try to limit downside in portfolios by getting out of the market. And by doing that, I think it helps people to not panic and abandon the strategy. Whereas if a client is in a passive portfolio and their portfolio falls 30%, the probabilities of them saying, okay, I can't handle this anymore are much higher than if they're only down 5%. So I think that's a really nice advantage of what I do to try to help people stay in the game longer versus abandoning the strategy. Does that make sense?
Yep, absolutely. How is a service kind of like what you provide different than downloading an app? Like I used, when I was younger, I think it was Fidelity, buying, selling shares. My friend does that and he only talks about it all day. Should I do it? Am I missing?
Yeah.
What are your thoughts on that?
So it's just like selling a home, right? If you're just, if you're a person that works in XYZ occupation that is not real estate related, as you can say, whoever sells a home on their own, there's going to be many, many problems that they would get stuck in that
There's
an
definitely
expert,
FISBOs for sale by owners. Definitely. I mean, people can do it. There's a lot of things that can help,
right?
but it is a huge difference. And I can send whoever wants. I did a whole analysis. I can send it to you, no
Right.
problem.
Right. So it's the same exact thing. Anytime you try to be the pro and that's not what you do, you're going to encounter problems that are going to cost you more in the long term, most likely. And managing money is, like I said, I think besides brain surgery, it's probably the hardest thing in the world because there's going to be things that come out of nowhere that nobody could expect. So for somebody that says, well, I'm going to download an app and the app is going to tell me what stocks to buy, all those apps are passive strategies. They're going to tell you put X amount in this, X amount in this, X amount in that, but they're not going to call you and tell you, hey, this might be the time to get out of the market because things look like they're going to get really bad really fast. They're not going to do that. They're basically going to go down and down and down and down until you panic and you say, all right, I can't handle this anymore. So money is, they say you cannot put your emotions when you make financial decisions, but it's not that easy, as you know, because money is very emotional. So it's very easy to say, this is what I'm going to do. But when you get into the nitty gritty and you're in it, it's not that easy to separate your emotions from your financial decisions. So it's harder. So I think that it's easier and it's probably more productive for a person to find a good financial advisor that really has that practice at taking the emotions out of investment decisions.
Okay. Um, we have a question from somebody who's watching. They are saying, sorry that it looks like I'm not looking at you, I'm just reading it off.
Okay.
They are saying, if I'm 35, I wish, if I'm 35 and I want to retire at 65, is there a way to calculate how much I should invest monthly?
Absolutely. Yeah, yeah. So that, that's the easiest thing to do because it's just math, right? So that anybody can do that. You can actually find all kinds of calculators online. My website has a bunch of calculators as well. You can go to my website. It's passportwealth.com. You can call me. My number's on the website as well. And I don't know if you're going to provide my number on this email,
I
but if you
will
do,
at the end.
okay. So anybody can call me, and it's a simple calculation. I've actually created all the calculators myself. My background was accounting, so I love numbers. But doing those calculations is a piece of cake. Actually making it happen is the hard part. But I can easily in 5 minutes tell you at age 35, with this much income, by age 65, with this return, you save this much, you'll have this much. That's black and white. It's easy.
All right.
Yeah, that's the easy part.
And
Making
at
it happen is the
42,
hard part.
and at 42, can we do it as well?
It's not that much worse, but call me and I'll tell you.
Yeah, I think we're already working on that.
Yeah.
So, I mean, there's a few more questions which I'll email you and I'll get the answers to the people, but I know you have a meeting at 11, so we're gonna wrap it up. I want to
Okay.
thank everybody. We had a lot of people come in and out and ask questions. I'm noticing when it comes to money or when it comes to like last week we had Stacy Lee Chanel on. Um, People would rather send me messages directly than post it on the live and ask questions, which is perfectly fine. But that's why I keep on looking down all the time. I'm looking at my phone because my WhatsApp keeps on going off. Carlos, I wanted to say thank you for your time. We have, you and I talk, but it's not normal for somebody to bug you as much. But it's okay, right?
Absolutely. Listen, I
So
love talking to my clients and answering questions. And, the financial topics are complex. And like you said earlier, there is no crystal ball.
right.
So you can have a strategy to get as close to the crystal ball as possible, but nobody's ever solved the crystal ball situation and probably will never get solved. Looking back is easy. I mean,
Right.
everybody can be a Monday morning quarterback, but it's going forward that's hard. And that's what I try to work on.
One thing I do have to make a comment about recession last, not that we're in a recession, but what happened I left the United States in 2006, came back. I moved to Israel and came back. And I'm seeing people being a lot more cautious, which I completely appreciate compared to the nonchalant way that we were back then when
Yeah.
the actual recession happened. And that is something that I appreciate more than anything. Our thing is between David and myself, and the way that we work and our mental thought is, you always save for a rainy day. And with that we also have it very, very much instilled in us. And our friend Curtis Nightingale is doing it with us as well. And we support the small businesses that are the ones that are about to go belly up, unfortunately.
Yeah.
So on that note, you're a small business, I'm a small business. There's a lot of small businesses that people don't realize that are out there. If you guys can support, go out and support. Obviously, my friends and the people that are watching that are in Cooper City Buzz, or follow me on my personal page of Ronnie B. Staring. We post Cooper City Buzz deals every night, and that's to support our local economy and our local restaurants. And those are the 1099 people that we were talking about 2 moments ago.
Yep.
So on that note, Carlos and everybody, be vigilant, be safe, please be healthy. If you need anything, if you'd like to reach Carlos, I'm more than happy to give out his information. I will post it up there. and we will go from there. I just got another question, but guys, we got to go because he's got to go. Thank you so much, and we will talk soon.
Thank you, everybody. Have a great day, everybody.
Bye-bye.